Welcome back, guys. Welcome back to the Trading Tavern. Alex, Gary, thank you so much for joining me once again. It has been a roller coaster of a week, or a rocky week for one of you anyways, because Scruff, you've been out on a boat. And obviously you've had a very busy week in the trading world and the prop firm world, Alex. And it's kind of a topic I wanted to discuss today. I know it's a very heavily discussed topic at the moment, but I wanted to go another path with it, but I think it's important we bring everyone up to date and bring Gary, who's been away, up to date with what's going on. So I'm gonna handball this over to you, Alex, and let you lead the conversation here. How do you want to run Gary through this?
Yeah, so obviously, Scruff, you've been enjoying yourself on a nice boat, as Jordan mentioned. Where did you go? It was Norway you went?
Norway, up the Norwegian fjords. And I do know a little bit about what's gone on.
Yeah.
Because I had sporadic sort of internet connections.
Yeah.
But one of the beauties of going up there, apart from the scenery is fantastic. Took a cruise ship up for a week in the Norwegian fjords. Is the peace and quiet. Because when you're talking to me today, I'll be like a blank sheet.
Yeah.
And I haven't been exposed to the chitter-chatter that goes round on the internet, etc. Because when you have a situation that we're about to talk about, and I'll let you kind of explain that, you will get a lot of secondhand knowledge that is really just hearsay. And I'm interested to hear it from the horse's mouth, because you are on the coalface and you will see it firsthand back end. Whereas on YouTube, it's just going to be, oh, well, this is happening, that's happening. And they've got no idea what's going on. Is that a fair comment?
No, that's a fair comment. So we'll start off with, obviously, the freezing of all of my Forex funds assets, and basically them getting taken to the cleaners by the CFTC and the Canadian...
the
regulation.
Ontario.
I don't know what they're called, but basically telling them to cease all trading activity, all business activity while they're under investigation. And I'll let people go through everything because it's quite a big document of different things that have been going on behind closed doors. But a lot of it was basically them acting a bit like a Ponzi scheme, but also manipulating trading activities to get traders to lose, basically. Now, Gil and I jumped on a live stream with around about 3,000 people at the time, I think it was, to clear the information about the industry as a whole, because a lot of new companies, they don't actually know what they actually are. We don't know what they are. They're saying they're a funding company or a private equity company, but really they're just brokers. They're reselling brokerage services, and there was a lot of misinformation. So we went on to a live stream and tried to clean everything up. But what I wanted to speak to you about is, one, what do you think about that? And two, now we're seeing other firms come to light. People are doing more research into these other firms. Suddenly we're seeing more manipulation is going on with other firms as well in this industry. And it's very difficult. And this goes into what Jordan wants to talk about today. Who do you trust? Who do you trust with putting all of that time and effort into a challenge to then find out, one, then they're not going to pay you out, or two, they're doing everything to slip you or charge you extra in certain things. Everything in a trader's edge comes down to commissions, comes down to if he's getting slipped. All of these things have a really big impact on if a trader is going to be successful. And if these companies are doing that to a lot of people, then it is obviously it's not good.
Well, it's wrong.
It's wrong. Of course it's wrong.
Well, let's put it from another perspective. Now, I'm roughly 19 years in this industry, give or take. And if we went back a decade, right? See, because I'm old enough to have done that when you two were still in primary school. because that's what you look. You're too young.
Not in primary school, but getting there.
Sorry, boys and girls, we were having a conversation about Alex's baby looks earlier on. But if we went back 10 years ago, if you were a trader and you were pulling between 15 and 25% per year, you were deemed to be incredibly good.
Yeah.
Right? Incredibly good.
Yeah.
The prop industry came along and they were wanting you to do 10% in a month. Now, you and I both know I've had this argument a long time about timestamps on traders. It forces you to take trades sometimes you wouldn't.
Yeah.
But it certainly forces you to be a gambler because you'll over leverage what's going on. And over leveraging is a problem. Now, you look at the prop industry the way it is, it's sold in such a way that it's always big money and the gambling side, not the trading side. So, of course, anybody that's sort of monitoring these situations is going to look at it. And then, as you said, you delve underneath the layers, then you find out they're not quite as kosher as you think. It also takes me back a couple of years when ESMA rules were coming into sort of Europe and the UK. There was a big boo-ha about how it's the end of retail trading. No, I was actually an advocate of it. I thought it was a good thing because it stopped the over-leveraging. It stopped people that haven't really earned their stripes to be traders from losing a fortune. And here we are a couple of years on the other side, and we're better for it. So this idea of regulating the prop industry, what's happening, is probably a good thing.
Definitely.
You know, and from my perspective, I welcome it. And obviously, I do know the 5%ers quite well. And I'm approached pretty much every week by different firms to highlight and promote them. And I always say no, because I don't know them and I don't understand their ethics. Yeah. But when it comes to the fivers, I do, which is why it's the only company I put my name to. I welcome it. And I'm glad that the fivers welcomed it as well, because that shows the moral compass. Yeah. And the moral compass is something that is sadly lacking in the trading industry. Yeah, well, that's a bit heavy for this time of the morning.
Yeah, let me stop this from being a running ad. And
well, it's not a running ad. I'm just I'm highlighting a few things because I've been even approached by, and you may get this as well, Jordan. You touched on white label brokers. I've been approached by other companies saying, "Look, we will set you up as a prop firm to give out to your community." But really all it is, it's just their prop firm with my logo on it. It's a white label. So again, sometimes you don't actually know which company you're dealing with.
That's the problem.
And that's what I was trying to drive at.
That is the problem. With a lot of these overnight companies that have come out, very quickly, you're looking at a massive multi-level Ponzi scheme that you don't even know is there until it obviously breaks down and then everybody loses trust in the industry. And for us, that is absolutely the worst case thing that can happen, because once you splat an industry of that is the way it is, and people get this understanding that everything, when somebody says a scam, they look at everybody as a scam, and that's a big problem for us. We can't have others in the industry getting labeled as a scam because we're painted with the same brush. So, difficult place to be in.
The trading industry is always difficult to start with, and that's the problem with it. You know, you see the wannabe gurus all the time, and then suddenly everybody is painted with that same picture. So that it's company wide, that Alex. I think one of the problems that we have at the moment is there's been very limited regulation on the prop side. You don't know
no regulation.
Well, no regulation. Yeah. But you don't actually know what type of company it is, as you alluded to earlier on. Because you can have a true proprietary firm where you have your own trading desk, you have allocated funds, etc., and you are paid on your performance.
Correct.
Or you have this other shady side that really it's synthetic funds. They don't exist in the first place. And they're setting you up to fail because the business model is not making sort of the invested capital that you're assigned grow. It's actually the fees. The fees is what is the driver for that company. So of course they're going to put too many barriers to make you fail. So you could be a good trader, you could be actually really good, and going back to the 10-25% from 10 years ago, you could be in that category, but the barriers are so difficult. You would have to be superhuman in order to continue.
I think. Sorry. You go.
No, I was going to say, and there we go into Jordan's subjects.
Well, I think to some of the people that I really feel sorry for, and I was chatting to one the other day with this whole scenario, is traditional proprietary trading firms. Before funding, like the online funding was a thing, right? Before our industry, I've prop firm, I don't know where the whole industry is able to adapt to that name. I'm not sure that should be a thing because, as we've discussed, they're not prop firms. So they definitely shouldn't be able to call themselves funding. And I think it's when regulation does come in, whether this is the wake-up call or whether this was just, no, you were blatantly doing something illegal, see you later, we'll sort it out. Being their own liquidity provider, it was really scruffy. So I think it's really important we differ these two things between funding and between an actual proprietary trading firm and the way that those two operate, because they are very different. They are very, very different. Now, the funding world has managed to adapt that prop firm statement, and I'm not sure how they've gotten away with it, but they have, and all of a sudden we're all called prop. And I myself, I still call them prop firms, right? And when I mention prop firm, you guys know exactly what I'm talking about and what I'm referring to. And I think that is the beginning of the misleading, right? Where all of a sudden people are getting roped into not fully understanding what it is they're a part of. And that's like the small stepping stone before you're on a tumble down steep hill. And it's the whole play on names and instant trust, this which always baffles me. We discussed it in our last episode of Bulls vs Bears, Alex, where there's just an immediate trust by people to listen and believe everything that is said, and especially in this world where we are. They'll sit down and they'll listen to a video exactly like this, and they're just back of hand believe whatever it is we'll say. For example, right? I'm not trying to shoot myself in the foot here, but I'm really making an example of that. And you'll see it. And then it just gets delivered through multiple chains of communication. Someone tweets, my FF has been shut down, for example. MFF has been shut down. That person then goes and tells this person, oh, this has happened. And then that person added a little bit of mayo. Oh, I think they went bust. Next thing you know, they're in the Star Wars universe, right?
Yeah.
but it's...
Well, no shock.
What I'm trying to get at, and this is more for the people watching this, and I think you're going to be level-headed if you're watching this to the point now in a way, because we're pretty in deep here. And you care about this if you're still watching this. It's before you ever share information or you intake information, whether it be from me, from Alex, from Gary, from anyone, anywhere, how do you vet that information? Like, how do you make sure that what you've been told isn't a load of tosh? How do you know that only 60% is correct? How do you know? Now, there's not a definitive, I'm not going to give you a step-by-step tutorial on how to do it, right? Because it's not like that. It's more investigative, get a couple of opinions before you draw your own opinion, but it's kind of the point of don't just listen to one source and believe that source because it looks like they know what they're doing, or they've said it with confidence. They've delivered it in such a beautiful way, and they've said it in such a great way that it's true. And I think so many people fall for that modern day. And that's what leads industries and firms like this to get out of hand. And that's why white labeling has become so popular, because people follow people just whole heart. I like that guy. I'm following him. I believe everything he says. And then when that guy gets $30,000-$40,000 waved in his face going, hey, let's build a prop firm together. This is a great chance for us to both make a lot of money. Without a doubt, they go, absolutely, let's do that. And as you said before, Alex, they don't know what their business model is. They've just been granted a good opportunity. They've been opportunistic, used their opportunity to make some money. And everyone just follows this guy because they trust in what he's told him so far. So they must trust what he's saying is true, is proper. We can go, and it's just this never-ending depressing cycle, which I'm talking about here, right? And I just think I just wanted to highlight that for a moment, just to get viewers thinking. That's all I want to do. I'm not giving you an answer. I just want to put that thought in your brain. And next time you get some information, even if it's from me, all right, next time you get some information, just be like, okay, why is he saying that? You know, what's the incentive bias? Where's the research come from? It's always important to get an understanding of where things are coming from a holistic point of view, rather than just listening to one personality. And you can avoid running into situations like is very prominent in the industry right now. That's just a little rant.
I feel the majority of people are like that because you naturally assume that other people are like you in the way that you wouldn't, I wouldn't say lie, but you wouldn't say something that is not true. So then you wouldn't expect somebody else to do it as well. So then when you're listening to a lot of information and people, you expect what they're saying is true. And that's just the cases between the majority of people that watch content. I think the majority of people are honest people and transparent with a lot of things. And I think that's why when they're looking at different types of content and things like that, they're expecting and assume that this person is being totally transparent with them as well. And only after a little bit of time, you start to, that white canvas that you are starts to get a little bit dirty over the years, that you understand that life isn't always like that. But that's, for a lot of people coming into this industry, that's the way that they are. That's what I think anyway.
No, you're not far wrong, but there's also the element of people come into the industry thinking it's easy. And
trading in general.
And a lot of prop firms sort of leverage into that, saying, oh, look, we're going to give you this huge amount of money and you're going to be pretty wealthy pretty quick. We're going to speed up the process. Now, a degree they can, but it then comes down to how it's put across. Now, for me, when they sort of throw any of the big figures around, you're going to get a £300,000 account. Well, you're not really.
You get
what you're getting is buying power.
Leverage.
You're getting £300,000 worth of buying power, and I think they misread that as well. And that can be another reason as to why this might be getting regulated, because it is kind of hidden in the small print and one thing or another. Your drawdown's really the account, and they never see that. And I've had many a conversation, and they go, "Oh no, I can put a sort of 2-lot position on." Well, yes, you can, but you've only got a finite amount of drawdown.
Yeah.
And once that drawdown's gone, that account is gone. So the education side of protecting your account is very limited.
Yeah.
And this will come back to Jordan's question of, if it was your money, because I know do you trade your own money? Do you trade prop? What's the difference in the way you trade prop money against the way you trade your own money?
Are you asking, or is that
the answer to that? There is no difference.
There shouldn't be, but there is.
And what would be
when it's your own money? And I always tell guys, whoever I'm looking after one thing and another, before you enter a trade, you ask one question. one question, and it has to be binary. Can I afford this? Now, when it's your own money and you're looking at it and you think, oh, this might cost me 500 quid, you kind of think twice about it. But when it's prop money, it's almost synthetic, and you take the risk because you think I can always buy into another challenge.
Do you feel like that can prevent you from being your top performance asking that question? The reason I say this is because if you're always looking at your trade and you're saying, can I afford this? Maybe you won't take the trade that you should be taking because you're asking yourself a question.
But
You might have recency bias for the last 3 or 4 trades that you might have lost, which is recency bias on this particular trade. You say, can I afford this now? Whereas your edge and your strategy could be turning around and saying, this is the trade that you need to take. But because of all of those recency, all of that recent losses, you're not taking it because you're asking yourself the question. Whereas I would go back to the saying as, what is the statistics on your strategy? Should we even be trading the way that we're doing now as a discretionary trade?
I agree, but part of your strategy should be, can you afford it? Are you going to put too much stress onto the account? And if you are, well, if you're saying, well, you take it anyway, then you are putting that stress even further forward. You know, you should always trade within a guideline that is safe. And I've told you before, I trade on the back foot. I'm always looking at it defensive. Whereas if I was aggressive in your scenario, and I said, well, I don't think I can afford this, but I took the trade anyway, am I actually trading or am I gambling?
So maybe in that case, you would lower the risk.
Well, that's the question. Well, that's my thought process. I go, can I afford this? And if I'm, say, at £5 a point, and I say, well, no, I can't because the stop has to be X far away, etc., etc. I've got 2 choices. I either don't take the trade or I half the position size. And then I ask myself another question. Can I afford this? And if I say yes, and I'm comfortable with that, that makes you trade a lot safer because now you're looking at it objectively, safely, and I'm not frightened. Because if you make a mistake, well, you've agreed to that mistake. But if I didn't agree to it and then I made the mistake, well, that is just wrong. You're not gambling, you're not trading, you're gambling. And then that builds up your confidence. Now, the prop industry forces you almost in a way of saying, well, I need to get to the challenge. I've got to get there. I've only got 10 days left or whatever. You would take the punt. And if you're right, yes, brilliant. But then it's just taught you a bad habit.
I think I agree with the can I afford this approach. I would do it differently in essence, and I think this leans more towards where Alex's head's at. I'd ask myself, can I afford it prior? Like that's, for example, when I'm doing a prop firm challenge, I'd ask myself, what can I afford? As in, what should I be risking per trade? So I'm not thinking about it every trade. I'm not letting it get in my head every trade, because if I'm in a losing streak, I'm going to sit there and go, absolutely not, I can't afford this, right? But I position myself at the start of it, knowing backed on statistics what to expect. So in essence, do the exact same thing, and it's all about understanding what you can afford to lose, and still giving yourself the best probability to move through that. But I agree with both of you on that point. I just wanted to bridge that in because I think we're all on the same page there. We just have a different process in the way that we do it. Going back onto the MFF situation, was there anything else we wanted to add to that before I moved into our debate?
Nope. I don't think so. I think enough's been said for people, as we said in what you rightfully said, Jordan. People gotta go do their own research. It's quite interesting reading as well the document that they put together with the filing of everything that was they're going to take to court. It's a very interesting read, so go and read it. It seems like they don't understand the industry as a whole. They obviously don't understand that there's specific drawdown marks. There's a lot of stuff in there that they don't understand. So everybody needs to go in, do their own research, and then go and check whatever firms that they want to go and get funding from. Check all of these things out, because there are more firms, unfortunately, out there that are very similar in the conditions and slippage that you saw with MFF, unfortunately.
Here's a question just before we move on, because obviously I've been in the dark for a week on one thing and another. The regulators that are coming in and one thing and another, have they highlighted any kind of protection to the trader? Because to give you an idea, if sort of my account goes kind of bust, I can claim so much of my money back. With the prop industry, my belief was, because it's kind of outside of the financial institutes, if they say shut, that's the end of it. Whatever you've got there is gone.
Correct.
Yeah.
Where I think what has happened specifically with my Forex fund, because it was in the US and they were saying they had a third party liquidity provider. Yeah. That third party liquidity provider was them.
Oh, right. Okay.
Yeah. So
they had a group, and the subsidiaries of that group were the liquidity provider and the firm. So technically it was a different business, but it was owned by the same group.
It was a third party. Yeah. The third party was the same entity.
Yeah. All in the US.
All in
where
the US.
CFDs isn't legal. So the bits
they kind of shot.
I recommend having a read. Yeah, I recommend having a read of the documents and.
No, I will. It's just because I'm held down. Persistent this morning, aren't they? Good.
But anywho, right, we've discussed that. Right, let's pick up the levels a little bit, the energy levels, and let's get some more music on, like Gary's doing. And I wanted to discuss. Alex, I understand the fivers, right? And you've obviously been at the fivers for a long time. Today, I want to talk to Alex, the trader. I don't want to talk to Alex from the fivers. I want to talk to Alex, the trader. Same with you, Gary. I'm talking to the scruffy trader.
Yeah.
But I want no biased opinions. I want no prerequisites, anything like that. I just want pure honesty in this conversation from you guys as a trader and from myself as well. Prop firm versus your own account, right? Or trading funding versus funding your own account at a broker. Okay, the key difference is obviously the funding method and the amount of money you can get, risk management, leverage, tools, resources, and profit sharing. They're the main ones I've pointed out. I want to discuss each of these on a deeper level with you guys to get an understanding of your opinion.
I'm going to get told off.
You're going to get told. Yeah, you are. You are. But I want your opinions. I want a bit of an idea on what your thoughts are in the eyes of both experienced traders and both as if we were also talking to new beginners. Okay. I want to discuss both fronts. So to start it off, I just wanted to talk about a barrier to entry, right? Very, very simple. Is it easier for a brand new beginner to start with a firm or to go out on their own through a broker?
I think that's a good question to start off with. And I think starting off with a prop firm is much better as a beginner because it allows you the battleground to start learning how to trade without any time limits these days, without the risk of mass capital. And the reason I say that is because if you're putting a grand, 10 grand, whatever, into a live account, it's not, it's obviously you're trading the same, but it doesn't give you that, again, the battleground to really learn. Whereas I feel like a prop firm, you put a really small amount, you get a bigger account, you can learn how to risk manage a little bit better. And I feel that you can do that without risking your own capital to start off with. Once you start getting a strategy together, then put your full amounts of capital that you want to do into a live account with your own personal retail broker and trade that on the side. But I think to start off with, definitely a low cost prop firm account, a little bit like the boot camp. I'm joking.
I can go with that, but I'm actually on the other side of the fence.
Nice. So tell me the other side of the fence.
Because we just discussed about the way the prop industry can show big figures in one thing and another. But it's like you go to the gym a lot. Would you expect somebody to lift heavy weights on day one? No, you've got to build up muscle memory. You've got to build up some form of routine. Now, with the prop industry, you're literally thrown in at the deep end. You know, it's sink or swim day one. Whereas when you've got your own funds, it's slightly different. You also got more emotional attachment to your own funds as well, because it is yours. So, yes, you still got to have the disciplines in one thing and another, but it takes a lot of mental discipline to trade size. And you're better off building up small. So if you start with a small account, and I did it this year, and you watched it, I took 118 quid and I built it up. That account's now worth 1,300 quid in 8 months. Now, I know
that's insane. People
will go, whoa, 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 whoa. But I was trading with 10p's. And I did it on purpose to show the guys this is how you do it. All right. But if I was brand new to the industry and I didn't understand how to build that up, and then I was suddenly chucked in at trading half a lot, your mental capacity can't take that, because the swings is be massive straight away. So you'll naturally make mistakes. So I think you trade small, you build up to a confidence level where you are, I'm quite good at this. I'm okay with this. I'm now comfortable to trade a bigger account, but I don't have the funds to do it. But I built up £500 or £600 or £1,000. I can now buy the prop challenge, going in fully aware of what I'm doing. So I would be on the other side of the fence.
I can understand that. I can see the rationality behind that as well.
Yeah, I think I can see both parties. I think starting from a retail perspective, and I'm just kind of revamping what I went through and what I've seen is obviously there's a pretty large lack of guidance, at least something that's credible and worth listening to as a beginner, because you know what you're looking for when you're getting in as a beginner, and the sharks out there know exactly what you're looking for, so they market it that way. Whereas if you're in a right space, a right prop firm space, there's going to be elements of community building. There's going to be elements of understanding and potentially even education through there, which I like. If we were to flip it back over, what I don't like is that feeling that you get you're playing with house money. I almost feel like it's going to come across as trading on a demo. Like you care because you've paid for it, but that 10 grand or that 100 grand, it's not really yours. It's not really in your bank account. And you're going to kind of play a little bit like that. And I'm worried for beginners in that space as well. So I'd lean back towards the micro trading, real small pennies on the dollar, make it boring. Make it real boring. When it comes down to P&L, real boring, like waste of time boring. That's where you really learn to trade. That's where you really develop your strategy, when it's so boring that it just doesn't look like it's worth your time. And yeah, I think if you make that jump straight to bigger and bigger accounts, it's going to be a bit like, well, was that a smart decision? But on the other side is I think there's a lot of safety nets being involved there. You know, instantly going to be taught the importance of risk management, Retail trading, you're not. Retail
But
trading,
are
they're
you?
going to tell you well, yeah, but yeah, exactly. So it all depends on where you find yourself and where you land, and that can be tough for a beginner. But I think there's positives and negatives to both in that space.
I can just add something to what I said as well, is going off what both of you have said. It is true that leverage is it's an addiction. Leverage, having too much leverage, gets very addicting. And when you have got a big account, it's very difficult from going to a big account to then a really small account and getting used to the fluctuations in price and seeing it on a small account. So I can see that I can see it can be quite difficult for some people, but I still stick definitely to not putting all your money on the line straight away and using that as a playground to.
I mean, there's an argument for both, and
Exactly.
I would actually have, well, I do have both running in tandem.
Yeah.
But my wage and my primary is always my funds because it's mine. That's where my first loyalty lies. Because there's another element, because we've just had a conversation about the industry going into turmoil. At least with my funds, I know it's mine, and I have full control of it. Nobody tells me what's going on. I make the decisions. With the prop industry, and we do see this over and over, sometimes for the better, sometimes for the worse. They change the goalposts. And that, to me, is not right, because you'll sign up for one set of rules and you understand what's going on, but then there's a knee-jerk reaction to market conditions or the new spinny thing. And what you'd signed up for is now something else. And then that can confuse, and you sort of think, well, I don't like this no more. You never have any of that with your own funds. You control. The only thing that can change is spread, commission, or whatever. And then you just go, oh, fair enough. I'll just pull my money out and I'll go to a different broker if I'm unhappy with it. But there's nothing else. It's just you and the screen.
Yeah, and I think it goes back to that same as you can pull your money out. You know, you can compound it, you can build it up, but you can, if you can't trade anymore, right? You just lost your touch and you're really struggling. Your performance isn't there. You can still take that money and invest it elsewhere, or you can use it in a different project, or whatever it might be. You've got the funds, right? It's tangible. It's yours. I think that's another obviously element on that. And when moving into the prop space, you need to have a mission. At what point, you know, if you're going to get funded upwards of $4 million, for example, you need to be aware that you don't get that $4 million. You get to trade with it. So you're only going to make money off that $4 million if you're trading with it. So do you plan to be trading in the next 15 years? Do you plan to still be sitting at your desk day trading? You know, these are things you need to have a think about as well. Going back to walking into whether you should be retail, whether you should be prop, performance pressure. Right. And I know you like talking about the time limits and stuff like that, Scruff, and we discussed a little bit about that. But Alex, I want to ask you, do you feel an essence of performance pressure when you're trading through the firm from what you've heard from people? What's your take?
I think it's more a pressure that people are putting onto themselves because they're looking at a firm or the way of trading to get something out of it to better off their current situation. They're looking at it as, I need more money. Yep. This is going to resolve this. And that is what puts the pressure on the person. The rules and the things keeps people in guidelines, and actually having those guidelines actually makes them a better trader if we do look at it. But the pressures are on what people attach their trading to. That's where I think the pressure is.
And going to, I've always found a mixed reaction here between some people when they get funded, they feel the pressure of this is someone else's money. I need to now manage this, right? And I've spoken to plenty of people that really get that pressure feeling of, hey, this isn't my own funds anymore. someone's relying on me to do a job. I need to get this job done, or I need to do it as safely as possible. And I always get along with that mindset a little bit better than what I do with the other mindset, which is people come in and it's less pressure because they don't feel the loss, right? It doesn't really hurt them. What are your thoughts on that, Gary? Where do you feel the pressure when you're trading your funded account that it's not your money, that you're reliant to keep it safe?
It's not so much the money aspect, it's more the performance aspect. As in, I am expected to perform every day. I am expected to do X every day. Yeah. So it comes down to almost, let's put it this way. I mean, many moons ago, I worked in the medical sector on the sales side as account manager. You were only as good as the last contract that you brought in. Doesn't matter what your past performance is, you're only as good as yesterday. The pressure in the prop industry is very similar to that, because you're looking at, I've got to get to this milestone, I've got to get to that milestone. I made $100 yesterday, I need to make 120 today. All of this sort of thing. So it's, yeah, I wouldn't say it's the money side. I would say it's the performance side itself, that you have to hit X amount of achievements. Whereas in your own funds, well, there isn't any achievements because it's open-ended. It can be anything. You can say, oh, well, I only want to make 50 quid today. And if you're just looking to round up the next 100, well, that's a good day. But in the prop industry, you're not looking to round up the next 100. You're looking to round up the next milestone. And that could be quite far away. So you're pressured to get there.
Which can both fold as a good thing and a bad thing, right? Having a plan.
It is. If you're
having a goal to get to, it's always a good thing to have. So when you feel that difference in pressure to perform, do you feel it has a positive or a negative impact on your trading?
Well, for me, it's positive because it pulls in focus.
For me, it's a negative.
Interesting. Okay, so let's start with you, Gary. Let's dive into why you think it's a positive, and then we'll jump into you, Alex, and why you think it's a negative.
Well, for me, the positive side is like I say, it pulls in focus. You called it a job, and I often say trading is a job. So you have X, Y, Z of tasks, and if you have a budget, you have to manage that budget. And this is what you do in a job. And if you've got a target, you've got to manage your target. So you break it down into bite-sized chunks. And then that focus enables you to be doing it. So instead of like going, I'm going to do 1,000 quid today, your bite-sized chunk might be 500. So you pulled in focus, you've achieved your 500. You might do it early morning. Do you need to go back to market? No, you don't. You've achieved your goal for the day, because you've actively worked it out. Whereas if you didn't have focus and you've done 500, well, you might take that extra trade we were talking about earlier on, where we're saying, can I afford this? That gambling element comes in. And instead of ending the day plus 500, because you planned it out as a job, you might actually end up being -2.
Mm-hmm.
So to me, it pulls focus and it makes me more objective with what I'm doing.
And Alex?
So if I put too much emphasis of thinking about my performance all the time, and for some reason, something in the market has an effect on my performance, because we don't know if the market's going up, down, sideways, spinning around. Nobody knows what's going to happen. And the problem is, if I attach so much of my emotions to my performance and something doesn't work out in my favor, then I'm going to start thinking too much. It's going to have negative connotations to my performance. And I might start thinking twice before I do something. I might start, that recency bias might start affecting me pulling the trigger on a particular trade. So I try to stay neutral on it all, try not to think about it all. At the end of the day, I've back tested this particular thing. I know this particular thing works. And when I see it, I do. And it still creeps in, recency bias and all of the things that we've been talking about. And sometimes as well, you know, being a little bit greedy on a trade, you know, putting too much size on a trade also creeps in, all of these different things. But if I focus too much on performance, normally I don't perform to my best.
Well, let me ask you a question. How do you measure your performance?
How do you measure my performance? I measure my performance if I'm doing the right things in the market, if I'm not trading, if I know that there's news coming out in a couple of hours and I shouldn't be trading. If I didn't trade and I stuck to what I said I was going to do, for me, that's a good indication that I'm doing well.
Okay.
I turn around and
that's what I was driving at. I was wanting to see whether your performance was based purely on monetary or whether, see, my performance, I base it on what I journal. Did I follow the rule book? Did I ask myself the correct questions?
Yeah.
Did I take the trade? Yes. Well, if I followed the process prior to that and I was still wrong,
good.
I would still say the performance is well.
Yeah.
Because I followed the process. But if my process was, I've got to make 500 and I didn't, so I failed, it's a different conversation.
If you'd have asked me that a year ago, maybe.
I did ask you this a year ago.
Yeah. I wouldn't care if I was getting in an NFP with ridiculous amounts of size. If I made money and I was up, that's a good day. I performed amazingly. If I lost money, even though I took my bread and butter setup and I lost money, I didn't perform today. And I was connected so much to the price, to the amount of money that I was making. And that really affected me. And as soon as I got out of that habit of connecting it to money, my performance got better naturally anyway.
Do you know something? That was the actual turning point in my career. Once I removed money from the equation, then I started to become consistent, and then that consistency naturally brought the money with it. You ever hear me talk? I always say, remove the money from the equation.
That's a very common flipping point for a lot of traders. And that's why when I spoke earlier is to get down to make it boring. Make it really, really boring. Because if you're trading real small and it is boring, you're not here to trade. You're here to make money. They're two different things, right? If you're still enjoying yourself and you're enjoying the process when you're trading so boring, you might just have that nick. You might just have that nick that if you put in the hard work, you can get there. If you're just chasing the money, there's definitely better ways to make money. I've always said, going down to making money in the last topic. You got to
definitely better ways to make money. If
there's
there'll
be someone you'll be surprised.
Well, I was a stunt double for Shrek, so that was all right.
Last little topic to touch on here: profit potential. Okay, between retail trading, between prop trading. Yeah, that's a good one. It's a good one because I can look at this in so many different ways.
I'm going tandem.
I'm leaving that as an open book. I'm gonna throw this to you, Gary, and all I'm saying is profit potential.
All right. Oh, okay. From a percentage point of view, they're equal. Because if you make 20% on one account, you should be able to make 20% on the other account. So from percentage points of view, they're equal. However, I will say prop can accelerate the process. If you're achieving your milestones, you're getting a natural bigger drawdown, which is your account, as I said earlier on. You do also have the natural bigger buying power. So you might be frightened of, say, trading the Dow. Now, the Dow is a vicious market. And on a small account, it'll kill it in a heartbeat. As you go through prop, you'll be able to get into that. And then you can start trading these fast markets. whereas your own account mightn't get there that quick. Now, if you have a sizable account, I don't think it makes any difference between the two. But when you're first starting off, prop will definitely accelerate the process. That's kind of my on the fence way of looking at this, because I have a reasonably large personal fund. But if I wanted to get there quicker, having gone through both, prop would get me there faster. But the caveat is I would use the prop money to put into a personal fund. And then I've got the protection. And as we were discussing earlier on, I can actually pull it out if I'm not going to trade for the next 6 months. So that's it. Prop will accelerate it from a small account, but if you've got reasonable money to start with, both the same.
Yep, I agree. I got nothing really to add.
That's just a yep.
Yep. You know, when you hear sense, sometimes you can't really add any more. You just gotta
I could tell you some sense, but it'll be X-rated, and I'll tell you in the pub.
Yeah.
We're in the tavern, right? No, I won't get you to do that. Guys, I appreciate it. I know it was a bit deeper of a conversation today, but it's a big topic that so many people want to understand.
I think it's been an incredibly important one today. Because a lot of newer traders come in and they are dazzled with the lights. And I hope they take a little glimmer from today that sometimes not that all glistens is gold. You know, sometimes you've got to sort of look underneath, but also apply some common sense. You know, if you can't trade, you can't trade size, period. Trade small.
Yeah.
And if you're going to trade small, be protective and learn your craft.
Yeah, having more money is not going to increase your win rate or increase your profit, or it might increase your profit, but if you've got the statistics to back it, so many beginners think that things stopping them from getting successful is the amount of money they've got in their account. 95% of them are wrong. Right now, if you're trading with only $10, maybe, right, that might be a bit of a problem. But if you're trading anywhere from 1,000 upwards, and you can't make consistent returns, having more figures in there is not going to increase your consistency at all. It's all down to effort. It's all down to actual trading.
And just kind of final analogy on that. We both play golf. How many times have you seen a 28 handicap with all the latest gear because they think they can buy the way around the course? And then you'll have an old boy who'll pull out a golf club from the 60s and he'll leather them every day. You know, he's sort of single handicapper. You can't buy your way into this, and you can't buy your way out of it. You know, you just got to learn your craft, be an apprentice, earn a little wage, and work up to the big wage.
And if you get some bad clubs, you can break them when you get angry too.
Well, I've done that a few times.
Guys, it was a pleasure. Thank you so much for joining us here at the Trading Tavern, TradeDelicious. Guys, go check out Alex in the description on Twitter if you want to see more from Alex, and same for Scruffy Trader here as well. Head down in the description if you want to see
the interview with myself and Gil. Definitely.
That one. Yeah. If you want to hear from one of the founders of the prop firm space, go over to that interview as well, and you'll get a clear rundown on how the business really works.
Super.
Yep.
Cheers, guys.
Well done, guys. Thanks a lot.
Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at TradeDelicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.